On today's video, I want to share with you guys how you have to capitalize. Do you hear what I'm saying? How you have to capitalize the London session. Traders, I want to teach you and break down with you how you can capitalize the London session using this wonderful and powerful and yet historical tool to win in this wonderful trade or this wonderful moves, right? So I will be using gold, but this works in any pair. I've used it in any pair, and I'm still using it in any pair. But before we break down the video, hope you guys enjoy the video. Hope you guys subscribe. Hope you guys share the video. Hope you guys comment, and hope you guys click that link down there to sign up with the broker that I highly recommend and trade with. Or if you are looking for a legitimate course, we're having 3 exclusive sessions, exclusive services. You can choose which do you want to work with. Let's your T Academy to the rest from there. But without further ado, guys, let me break down this wonderful technique that you can use so you can capitalize and win and be like any other trader who is profitable and professional like I am. All right. So this trade, right, was mainly took based on how we used this technique. But this will be a very simple video because I want you guys to learn and understand that this is not something that works every day. But when it is the right time for it to work, I kid you not, you are gonna capitalize and win from it. You guys get that? So looking at this current structure, we're focusing on this current structure on gold, right? You can tell that, okay, gold has this lowest point. So from price having this lowest point, we now understand that price did what started pushing to the upside, creating our current highest point, creating again the second lowest point, right? Now, if you understand a bullish structure or a bullish behavior or a bearish structure or a bearish behavior, you can somehow understand how you can use this wonderful technique. Pure price action, nothing fancy, nothing new. It's just something historical and it's still working today, right? So we now understand that, okay, price created this first high and created our first low, right? And pushing to the upside, creating a second high, right? And again, creating another high, and again, creating another high. So when you now understand that price has been having two moves, we've been having 2 sessions that price hasn't been doing what hasn't been creating lows, because when you look here, price created what, a high and a low. Here we created a high, but we couldn't create a clean low. And here I created a high, couldn't create a clean low. But when you look at here, we created a high and created a clean low. Now, before we now break down this, I need you guys to understand that how you capitalize on your trading sessions, when you're trading your trading sessions, your New York, your London, your Sydney, your Frankfurt, or your Tokyo, you have to understand that structure is more important than anything. How your structure is sitting or how your structure is looking at that time, it's not very, 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 very weak. I kid you not. This is very important because once you understand your trading sessions and how your price and how your structure is at that time, you are going to understand how price will be moving and how price will be reacting if something like this or something like that occurs based on how you trade as a trader. But because now I want to show you guys how you can capitalize, that's when you are going to understand, right? So when we look at this first move, we understand that price created what? Price created a high, right? So when we look at our sessions, you can tell that it was what? 2 a.m. Southern African time, CAT in Johannesburg, right? It was 2 a.m. when price printed out this high, right? So pushing down, we look at what this is 1800 p.m., which is more like our New York session. This is our New York session, right? This is our Tokyo and this is our New York, right? So we do it, we continue, right? When we move to the upside, here, what was here? Here it was our New York session that printed out this high, right? And here it was our London session that printed out this high. So I need you guys to understand and get the picture that our Tokyo, our Asian session, I would say, our Asian session had bear momentum, right? But our New York session had bullish momentum, right? So when you come back here, our New York session had momentum, but bearish momentum, but we still had what, a move to the upside, right? Coming here, our London session had a range, but we can technically say it's a high, right? Because price did what, ended up breaking to the upside, right? So price had a what, a high on our Asian session, but it's a on our London session, but it's a range. So moving to the upside, with this one massive push to the upside, we now understand that our Asian session, most of the time, or let me just say, based on this bullish structure that we're having, price was always bearish on our Asian session on gold, right? Our New York session was always bullish. Our London session always had a range, but always showed signs of price being bullish, right? So when we're looking at here, we now understand what time is it? It's our Asian session, 01 a.m. or 100 a.m., right? Which is our Asian session market open, right? At this time, I'm far gone asleep, right? So we now understand that our Asian session usually creates highs and moves to the downside, right? So when you look at this, okay, this is our Asian session, move to the downside. Looking at here, this is our London session. What time is it? 12:00 p.m. Approaching our pre-New York. This is our London session, right? So looking at our London session, we now we now see that, okay, our London session price started with a rejection candlestick, a pin bar, price rejecting to the downside, indicating or giving us first signs of price being bullish, right? So this is our first indication. Looking at the second candlestick, it's a bullish close. Looking at this bullish close, we closed above our pin bar or our rejection candlestick. Three, what did we start? What do we find? We find bullish momentum, a bullish engulfing candlestick, or let me just say first signs of a confirmed bullish continuation to the upside. Let me repeat this again. We have a pin bar candlestick which rejected, right? And two, having a bullish candlestick, which are what, a second sign of a possible move to the upside. And three, having a bullish momentum candlestick indicating a possible and a confirmed continuation to the upside. And four, price is just moving to the upside. Do you guys get that? So you have to understand your trading sessions and you have to understand how structure is at that time. Because when you now know how the Asian session usually moves, and once you understand how the London session usually moves, and when you understand how the New York session usually moves, you can now understand that, okay, based on how structure is, if the Asian session looks to be bearish, let me wait for the London session to give me a confirmation of what might happen next. And if the London gives you a confirmation, you now hop onto the NY session. That's when you find that confirmation and prices cleanly moving to that direction that you anticipated. And with that being said, that's how we took this wonderful and impressive trade. Do you guys get that? But without further ado, guys, I need you to understand that structure in trading sessions go hand in hand, even your patterns and your candlesticks. But it's mainly based on how you approach it. But once you understand your sessions and your structure, there's nothing else that you need from there. Do you guys get that? So without further ado, I hope you guys enjoyed this video, and I hope you guys took your notepad, took out your notes, your notepad, and you took important information. And I still hope that you will use this information effectively. But you have to be mindful of one thing: this is not financial advice, because everything I say you do is mainly based on my own experiences and my own opinions. It can happen, it might not happen. It's only based on how you individually approach the markets. Do you guys get that? Hope you guys enjoyed the video, and I want to catch you guys on the next one.